because what happens to a business when it's not making money all of a sudden? Well, just like this, if we're not making money, then we have to take a look at the source of the problem and adjust our strategy in order to take advantage of new market conditions. And that's exactly what any business has to do. Any business who is not in a profitable position has to take a look at their business model and adjust their either they have to adjust their expenses, or they have to adjust their marketing and sales, or they have to cut back on expenses someplace, but they have to adjust to current market conditions, and that's exactly what we do in our business of trading. And that's why it really is a business, because we manage by numbers, and that's what all good big businesses do. They manage by numbers. So now this is an aggregate position of our demonstration account for the purpose of these videos. You will see this throughout all the videos that we're creating on this strategy. We start out in a cash position, and we normally trade. I'll show you down here. We normally trade maybe 3 contracts, 2 contracts, or 1 contract. This not only gives you, if you're just starting out, we suggest that you trade in 1, 2, or 3 contracts at the most in these positions. The reason for that is it's much easier to be calm, cool, and relaxed if you do have to do an adjustment and the position is a losing position, and you need to make an adjustment in your position. You're going to be a lot more relaxed if you have 1 or 2 or 3 contracts on than if you had 10, 20, or 30 contracts on. But I also want to show you what the profit potential of having more contracts. Eventually, as you get experience in this type of trading as a business, you're going to be able to have a great deal of confidence in your ability to adjust trades over time. I suggest that you begin with paper trading. Now, the Thinkorswim platform has a paper trading account that you can set up for free. It looks identical to this. The only thing that is different is if you look up in this top left-hand corner, this is a live trading account. It has a red symbol here with the Thinkorswim symbol and logo. If you have a paper trading account open, this is a green symbol. But the platform is absolutely identical. Everything is exactly the same. You can enter trades, you can adjust trades, you can look at charts, you can monitor your account. You can do everything that you can in a paper trading account with Thinkorswim as you can in this account. Take a look down here in the right-hand corner. In order for us, this is an aggregate graph, a picture, and you're going to find that these pictures are extremely important for us to monitor our trades. This is an aggregate position of our entire portfolio of the 4 positions that we have in the diamonds, the EEM, the IWM, and the SPY positions. This is what they all look like. If we were to monitor individual positions, for example, if we wanted to open our IWM position, all we'd have to do is enter the symbol in there, and you can see that the graph looks almost identical because we are still in our all of our positions in a portfolio basis. If we went to a single symbol, that's exactly what our current position in the IWM looks like. We are not in the center of this position. We're just a little bit off to the left, but I think we have upside potential, so we're going to maintain this position. And if necessary, we will adjust it. Let's take a look at our EEM. Our EEM position, on the other hand, is looking very, very good. We are exactly in the center of our position, exactly where we really want to be. In our SPY position, this is an iron condor. We're exactly in the center of this position. Now, a few days ago, we actually had to adjust this position. It would have taken a loss on this position because it came very close to our break-even in a large market move. But in our case, we actually made money. And I'll show you how that happened in the adjustment CD. Also, we're going to go, let's take a look at our diamond position. Our diamond position is also looking very good. We're almost in the center. We're just slightly off to the side. But we have a great deal of room. Now, the diamonds, remember, imitate the Dow Jones Industrial Average. So if the diamonds are at 126.99, that means that it's pretty close to what the Dow Jones Industrial is at 12,700. If we take a look over here, the Dow Jones is actually at 12,714. What is important is the fact that it does mimic the Dow Jones Industrial Average. So if you take a look at this, you can see that it's at 12,700 in equivalent Dow Jones Industrial points. We have a downside break-even point of 12,300 or so, which is a 400-point move in the Dow Jones Industrial, and we have an upside break-even of 13,270. So that means that we have close to a 500-point break-even to the upside. These are the kind of positions that we like to put on. We like to put on positions that it doesn't matter whether the indexes go up or the indexes go down. We make money either way. There we are on a portfolio weighted basis again, based on the diamonds. We have a great deal of potential on either side of this to make money. Our maximum expiration profit and loss figure is the green line. Our current position is the white line, and that's how we manage our trade as we go forward. You'll see both positions that we've closed out on the future videos. We're doing adjustments. I will show you exactly how to manage your portfolio based on the Greeks. Don't let those Greeks confuse you or make you uneasy at all. I will simplify them to the point where you will understand exactly what delta, gamma, theta, and vega mean to your position. And we are going to be managing our positions based on the entire portfolio and manage them by using these Greeks in order to determine exactly when we need to adjust our position so that we remain profitable at all times. We'll also take a look at some big picture ideas as far as technical analysis goes. I'll also show you exactly how we trade, how we select our trades, and the strategy that we use on our trades. It's absolutely critical to understand how our trades are created and how they're selected. And this is where